Family, welcome. Today, what we'll be going over is actually how to utilize the Harmonic scanner. The Harmonic scanner is about an 80 to 85% accurate tool, and it calls out over about 200 plus trades a week, family. So, if you do not know how to access the Harmonic scanner, it's very simple. All you simply have to do is just type in harmonics.im, and it will take you directly to the site. So, this is what the login screen will look like. So, just put in your username or your password. And boom, we in, family, we in. So this is what the screen will look like, and this is what it will consist of. So today is just going to be a basic harmonics call, just a basic naked scanner. Naked meaning there's no extra added indicators other than what's already on the screen, family. So I'm kind of going to break down some key points that you will actually use when utilizing the harmonic scanner. So if you look, family, where my mouse is over here on the left hand side of the screen, this is going to be considered your toolbar. Your toolbar comes with a bunch of different things you can use, like trend lines, horizontal lines, arrows, rays, things of that nature, family. So you can actually mark up your own chart. And then if you go a little further down, the other main thing that matters really on this toolbar is going to be your ruler. So your ruler is going to take all the guessing work out of how many pips you could possibly be gaining, how many pips you could possibly be losing. If you don't know what pips is, family, just watch your 100 level series videos through I Am Mastery Academy to get a clearer understanding. But just think of pips like this. Just like a ruler has centimeter and inches to measure that ruler, all a pip is a measurement of movement within the market. It stands for point and percentage, but it's a measurement of movement within the market, family. So that's going to be the main thing right here that you're going to use, that ruler. Okay? And then if you come over to your right hand side, we have the time frames over here where it says M15, M30, H1, H4, and D. So M15 just stands for the 15-minute time frame, meaning each and every one of these candlesticks, which is what this little bar right here with the wicks on each side of it is, each candlestick represents 15 minutes in the market, family. So this candle right here represents from 11:15 to now, and it will close at 11:30. This one will represent from 11 o'clock to 11:15. This one will represent 10:45 to 11 o'clock, and so on and so forth. So that's just the time frame that each candle is allotted on this chart. M30 stands for 30 minutes, H1 stands for 1 hour, H4 stands for 4 hours, and D stands for day, family. So with that being said, that does not mean you will get your money in 15 minutes. It does not mean you will get your money in 30 minutes, an hour, 4 hours, or in a day. It's just giving you a time frame of what each candlestick actually represents in the market. So the 15-minute, you want to use that if you're like more of a scalper. You're trying to go for 10 pips, 15 pips, but you're trying to get in and out. You're not trying to hold that trade too long. But all these other time frames, family, it's when you don't mind holding your trade for a couple of hours or even a day if you need to. So if you just want to get in, get out, I recommend the 15-minute time frame and even the 30-minute time frame. But all of these other time frames, you will be in them a little longer, family. And you can be in the 15-minute time frame a little longer as well. But it's a lesser chance of that actually happening. So right below the time frame, we actually have where it says Hugo's Way right here. So this will be your corresponding broker. Your broker just means like your bank account pretty much for trading. So we have a couple of different options. We have FX Choice, Hot Forex, Trader's Way. Honestly, family, it truly does not matter which broker. They all pretty much correlate the same. But if you want to get the direct correlation, then select your broker. So with me, I have KOT Forex. So my broker actually isn't listed here, and the one that correlates best with KOT is FX Choice. But family, like I said, it truly does not matter which broker we select. And then below, we have different currency pairs. So right here we have the euro versus the New Zealand dollar. We have the euro versus the Australian dollar. And then they have something on the backside of them after the comma, like Gartley, Cipher, Shark, Gartley, Cipher, Shark, Bat. All that means is, family, is that's what this yellow pattern is right here. So if we look over here, we have this yellow pattern. That is considered the Gartley pattern for this pair. So all throughout the world, even in math, we have geometric patterns because all the market is a repetition of what has happened in the past in the market. So don't think about it too much, family. The scanner takes all that work and does it for you. So please don't think too hard on it. You don't need to worry about whether it's Gartley, Cypher, or Shark. The only one that really matters, family, is going to be Shark. And that's just simply because Shark gives you 2 entry points, meaning it gives you 2 points where you can enter into this trade to actually profit and make money. Whereas all the other ones, they only give you 1 entry point, family. As you can see on this trade, there's only 1 entry point. So that's simply the only difference between most of the pairs. So now I'm going to kind of get into it, family. So right here, we have a blue candle. This blue candlestick equals a buying candle, meaning the market is increasing and trying to create an uptrend. So blue candles equal buying candles. Please write that down, family. Blue candles equal buying candles. And here we have a red candle. Red candles equal selling candles, meaning the market is decreasing in value and kind of trying to do a downtrend. So red is selling, blue is buying. Okay? So now that we actually have that figured out, let me zoom in a little bit for you all, family. Sorry about that. So now that we have this all figured out, your first step when utilizing the harmonic scanner is to locate the D. Step number 1 is find the D. If the D is below or at the bottom, you buy. So if the D is at the bottom, you buy. When entering in the trade on your MetaTrader 4 app, you will want to buy. Press buy by market. And if the D is at the top, you will want to press sell, which is sell by market. So let me try to find an example of that real quick for you. So in this scenario, the D is at the top, so you would press sell by market when entering in this trade on your MetaTrader 4 app. So in this example, another way to look at it is, if the D is at the bottom, buy, but if your take profit is above your entry point, you know that you need to buy as well. So if your take profit is above your entry point, then you need to buy as well. Now, in the same sense, if you don't want to think about, okay, D at the top, sell, if your take profit is below your entry point, then you know you need to sell. So D is at the top, sell, take profit is below my entry, that means I need to sell. That's step number 1, locate the D, family. So step number 2, what I like to use is wait for my most recent candle to agree with the trade idea. So what do I mean by that, family? Step number 1 is locate the D. Locating the D allows me to know whether this trade idea is a buy or a sell. So with this D being at the bottom, I know that this trade means it's a buy. So with step 2, wait for my most recent candle to agree with the trade idea. My most recent candle is now right here, and it is blue, which means it is buying. And step 1 shows me that D at the bottom means buy, so it is agreeing with that trade idea. So now I have done step 1, which is locate the D. Now I've done step 2, which is wait for my most recent candle to correspond with the initial trade idea. And it's doing that. So now, family, this is what I like to do for step 3. I like to come over here and grab that ruler I mentioned earlier and actually measure from where I will be entering in the market at to my take profit. So I don't know if you can see it. I'm going to zoom in a little bit for you. I'm going to zoom in for you. Sorry about that, family. But as you can see, we have a little blue line right below where it says entry. This is kind of attached to this candle. See, if this was a selling candle, it would be a little red line. But since it's a buying candle, it's a little blue line, family. So that's where we want to measure from, where we will be entering into the market at. We don't want to measure from where it says entry if we're not going to be entering right there. So what I'm going to do is step number 3, I'm going to measure from where I will enter into the trade to my take profit. So I'm going to come over here and I'm going to grab that ruler and click on it once. Come over here to where I will enter into the trade from this little blue line. Click, and I'm going to drag. It didn't want to drag for me. Okay, well, let's try that again, family. Sorry about that. We want to click from there, and we want to drag it up. So with this trade idea, and I'm going to click again to close it. So with this trade idea, we will possibly be gaining 59 pips. I know it says 595, but family, what we'll be gaining is 59 pips. So this last number right here is considered a pipette. The pipette is a very minor movement in the market, so we don't need to worry about that. But what we want it to be at least 10 pips. If we're not going to get 10 pips at least from this trade, it is not worth our time, family. We want at least a 10 pip trip. So with this trade, it's at least 10 pips. Step number 3, you want to measure and at least get 10 pips from your entry to your take profit. So that's what I like to do. And the second thing I like to do is I also like to measure from my entry to my stop loss. I like to measure from my entry to my stop loss, family. So what I'm going to do is now I'm going to zoom out a little, and how you can do that is by simply coming over to where these numbers are at, clicking and scrolling down to minimize your chart. So now I'm going to take my ruler and I'm going to measure from that entry point to that stop loss. So from my entry to my stop loss, it is about 73 pips. And I say 73 because it says negative 731, but like I just mentioned, we do not count that last number. And for me, I kind of like to get at least a 1-to-1 ratio. I don't want to possibly risk more than what I'm going to gain. I possibly don't want to risk more than what I'm going to gain. So right here it says we're going to lose about 73 pips potentially. And potentially we can gain about 57 pips, 58 pips to TP1. And when first starting off, family, stick to a TP1 diet. This scanner is 80 to 85% accurate, but those moves will take a lot longer typically to hit take profit 2 and take profit 3 than it will to hit take profit 1. So stick to a TP1 diet. So I can possibly lose 73 pips, but I can possibly gain 57. I know it's not a 1-to-1 ratio, but it's pretty close. It's for my liking. So at this point, you can kind of see if you would like to enter into this trade for that potential buy. So me, family, I use a fourth confirmation. If you haven't noticed, I haven't mentioned what this is down here. This little blue line down here. So this blue line down here actually represents the RSI. What an RSI is, it is a momentum-based indicator, and it stands for Relative Strength Index. And I'm going to break it down for you real quick, family. So right here we have a line that's marked at the 70. So the thing is, just remember this. If it is at the 70 level, just remember the market is overbought. And like I said earlier, the market repeats itself. So if the market is overbought, then it eventually has to oversell. Okay? If the market is overbought, it eventually has to sell off. So if this blue line right here was above this 70 level, that means the market is overbought and it has the potential to sell. And just like how I just said that, if the market is at this 30 level, family, that means the market is oversold and it eventually has to buy back up. So by looking at this trade, what I want to see is I want to see this little blue line cross above this other blue line. I don't want to trade it when it's below here because it can stay oversold, family. You want to trade it and catch that trade coming up above. So just like with this trade, it is coming above this line. So that's another confirmation that I actually want to enter into this trade, family. So what I want to show you is I'm going to actually make a line and show you so you can see what I'm seeing, because the RSI lines up with your harmonic scanner. It lines up with your harmonic scanner, family. So I'm going to show you real quick. So now you catch that trade as it's coming up and you know, okay, now this is a good trade to enter into. But simply, family, I am telling you this, but do not trade solely off of your RSI. You want to trade off of other confirmations. So with me, what I did is I waited for my candlestick to agree with the trade idea, as it did. I waited for my most recent candle to agree with the trade idea, as it still is doing. Step 2, I measured to make sure it will be at least a 10 pip trip, which means it's worth my time. And I also measured to see if it will go down here. Okay? So I did step 1 was locate the D. Step 2, candle agree with the trade idea. And step 3, I measured. And then step 4, I looked down here at my RSI, which is showing me that the market is actually oversold. And like I said, the market always repeats itself, so that means it's eventually going to buy. So now this lets me know it is a good trade to enter into, family. This is a good trade to enter into. And if you don't know how much you need to risk for your account or what lot size you need, IM Academy makes it very simple. They offer a calculator up here at the top. So you simply click on this calculator, and you type in how much you have in your account. So let's just say for this example, we have $100 in our account, and then you follow your risk management. So let's say we want to risk 5%. You then type in your pair. So this pair is right here, EURNZD. So I find EURNZD, I click on it, and I type in my entry, which is right here, this little blue line, 1.71100. And I type in my stop loss, which is right here where it says stop, family. If I did not mention that, where it says stop at, that is your stop loss. And where it says TP1, that equals your take profit. So take profit is the money you are willing to make in a trade, and stop loss is the money you are willing to risk and put up into a trade. Okay? So in this example, our stop loss is 1.70362. And then all you have to do is press calculate. And it gives you what lot size to actually use to enter into this trade. So in this scenario, we're going to use a 0.01 into this trade. And that's simply all you have to do, family. It breaks it down for you. It already scans the market for you, so you can know when to get in, when to get out. And honestly, family, that's just going to wrap up our training for today. This is a basic naked harmonic scanner, meaning that is no extra indicators added. This is exactly how the harmonic scanner looks when you log on. So if you like the value that I gave, can you please just give this video a like and subscribe to my channel? I will be doing more Forex videos, more harmonic scanner videos, more IM Academy product videos, just to make sure everyone's actually tuned in and getting the most value, family. So that's it with your boy Jeff Stellar today. Please tune in, like I said. And if you have any questions, hit me up on social media. My Instagram is Jeff_Stellar. If you have any questions, please reach out, family. I hope that this tool and this video was actually pretty helpful. And let's get it, fam. Let's get to this bag. We know how to use this tool. It's a multi-million-dollar platform. Let's get to it.